Currency market as well, which has felt the impact of the RBI policy. The rupee has slipped from a 5-week high. The bond yields as well have spiked up near 8.4%. Manisha is here to get us more details. Manisha.
Thank you so much for that, Aisha. Well, the two major events out of the way now. The rupee really seems to be digesting all that has happened in this week from the Fed and from the RBI as well. While the major impetus really was on perhaps there would be more rollback in sense of the tightening measures that the RBI has taken, that really hasn't happened. But even then, as I spoke to many bankers there's more thumbs up than thumbs down coming in for the economy and the RBI policy. So that's the reason you haven't seen too much of a volatile move coming in for the currency as well. At one point in time, after the rate hike was announced, you did see the rupee fall all the way down to 1/4% on the lower side, but it's holding down 0.5% at this point in time. Markets do feel that you have seen the balancing act coming in from the RBI governor, and that's the reason there is some support coming in. In any case, the market was factoring in something positive coming in this week itself, and that's the reason you had seen the rupee already come back from those 69 odd kind of levels to 62 into the markets. We did see a 5-week highs of 61.66 in the markets yesterday, and all said the rupee really seems to be consolidating, digesting what the RBI has done. Going forward, the point to watch really would be, or even at this point in time, even as you have seen the equity markets decline by 2.5%, the rupee really is not giving you or exuberating that kind of a volatility into the markets. So most of the bankers say that this looks more positive at this point in time. Going forward, if the RBI governor says that inflation would be contained in the next quarter, that would only give you more support coming in for the currency. As of now, most of the bankers still are talking about that 61 to 64 kind of a range going forward for the currency as well.
There is inflation. There is a need to protect the currency. But how much do you take rates up is really the issue. And I think he struck a middle ground somewhere. So I think it is a perfect balance, and I'm not disappointed at all.
Definitely a chance that the headline inflation ends the year much higher than the 7.5%. So which necessarily means that there is definitely a chance that the repo rate goes up beyond the 7.5% which it is today. And my best bet would be that the repo finally, end of the year, if more or less normal conditions prevail in the currency markets, there is a chance that the MSF rates would be coming down to, say, just about 9% from the current 9.5, while the repo rate goes up by 50 basis points, so the corridor becomes 100 basis points once again.